All right, this video is not for the beginner trader. This is a video talking about how I personally trade, and this video should help you understand concepts in the movement of the market. So I haven't made an educational video like this yet. That being said, this is going to be in depth. It's going to be long. It's going to be hard to understand, especially if you're a beginner trader. So I'm going to start off, first of all, making a list on why the market moves and what I'm looking for every single day in the market. First one, draws on liquidity. What are draws on liquidity? If you don't know what draws on liquidity are, then you're on the wrong video. This is something that you should already know. Different draws on liquidity are highs and lows. Biggest draws on liquidity are session highs and session lows, right? So if you don't already have this indicator on your chart, I would add it. It's called trading sessions. It just shows you what trading sessions are. But boom, this is a draw of liquidity, right? Highs and lows of different sessions. Every single day you take a trade, you need to have a liquidity sweep or a confident draw on liquidity where price can go. Different types of draws on liquidity can also be gaps or high time frame fair value gaps. What do I mean by gaps? This is a gap right here. This is a gap. Simply when trading hours are over, price gaps up, right? Look over here. This is a gap. If you don't know what a gap is, watch a video. It's a gap. You can see a gap on your chart. Very easy to find. Large time frame fair value gaps. I only say that because larger time frame fair value gaps have a much stronger liquidity than 5 minutes or the 1 minute chart, right? So boom, right here. This 4-hour fair value gap. This is a draw on liquidity, right? This 4-hour fair value gap right here, also a draw on liquidity. You can see how right here, you can see how price was a magnet to this zone and rejected out of it. Price moved up from down here to here because this fair value gap is a draw on liquidity, right? Boom. So what are we looking for with our draws on liquidity? We look for a reaction. This is important. We look for reaction from our highs and lows or from a fair value gap. We use this reaction to help us find where price is going to go next, which is also another draw on liquidity. So for example here, we see price during Tokyo put down this low, right? This is a low of a session, is a draw on liquidity. We also see London, and once New York starts, takes out this high, a prominent high, which has a lot of liquidity because it's a part of this gap. This wick was due to overnight. There's a lot of liquidity on wicks like these, right? And as you can see here, we have a prominent reaction off of this draw on liquidity. Off of this liquidity, right? On the 5 minute, I'm going to stay on the 5 minute here. We see an inverse fair value gap. When we see this inverse fair value gap, our 5 minute is now bearish. When we see this reaction, what are we looking for yet? Next, we're not looking for just the reaction. We want 5 minute bearish order flow, right? We also need a target for price to go to. That being said, we do have this gap down here, right? Where price needs to fill. This is a draw on liquidity. And we also have this Tokyo low, which is also a draw on liquidity. Boom. We already have 2 draws on liquidity, right? We see price react off of this liquidity. Where's it going to go next? To the next drawn liquidity, right? So that isn't enough confirmation for us yet. We got to go deeper. We see 5-minute bearish order flow. We see the inverse fair value gap. The next step we want to find to get the best entry is to find internal manipulation leg, right? So this is the external view we have. 30-minute, right? This is our external view. We have our drawn liquidity and we have resting liquidity down here between this Tokyo low and this fair value gap. These are heavy draws. We already swapped out. We already had a liquidity sweep of the day, and now we're going to our draws. But to get the best risk to reward, we zoom down to the lower time frames. Sure, we could have entered a trade like this, but we don't have as much confirmation. We also get a worse risk to reward. So instead, what we do, we'll scroll down to the 1 minute, right? We see price here. We see price here create another manipulation leg, swooping out this internal liquidity. This is a prominent high where a bunch of retail traders like yourself might have had stop losses here, right? This is a draw liquidity. This is not as strong as a draw liquidity as a session high or a session low. This is internal liquidity, and this is where we find our manipulation leg. That being said, we also see price tap right back into this inverse fair value gap. We see price tap back into this fair value gap, inverse fair value gap, and that's when we see the sellers come in, right? So we don't have enough confirmation yet after we get this liquidity sweep internally. Reason why? Because we are still bullish on this 5-minute. It's not until this candle closes that we are finally bearish. Reason why is because this candlestick right here closes below the previous low, right? So when we're going up like this, right? Boom. Let me move this over. This currently is a bullish trend until we break the previous higher low, right? And then here we can expect continuation to the downside. Reason why we expect continuation to the downside now is because our manipulation leg was put into place here, and it's following our higher time frame model, right? It's following this bearish trend we have. It's following to the direction of liquidity that we are looking for. When the 5-minute changes the state of delivery, and we are now bearish on the 5-minute, is when we scale into the 1 minute to find our entry. Where is our entry? For me, entries can change on the person you are, right? But for me, I see price tap into this fair value gap. And then I also see price reject the fair value gap. So right here, this is the first time we tap into it. I'm going to put my stop loss above this fair value gap. I treat, when two fair value gaps are like this next to each other, I treat them as one big one, right? So we see price is bearish. We see price tap into it and reject it. And then we can finally take our trade and we can follow it all the way through to where our liquidity is. Reason why we have conviction that that price is going to go down is because this entire time we built up to this manipulation leg, we created sell side liquidity. This is low resistance liquidity, right? This is giving us, this is telling us people are taking trades, putting their stop losses here, right? And they're targeting up here, blah, 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 up here. All these traders either took out their take profit here, another reason why price dumped when it hit here, or they're waiting to be stopped out when price dumps again. So after we see our manipulation leg internally of the model, we expect to see a retrace to a fair value gap or retest an order block, which we can see here. This is a bullish order block, which is now a breaker block, and we see manipulation to the downside. Sorry, distribution to the downside. And if we play this through, you'll see perfectly how fast this works. I took this trade this last week because I was thinking to myself this exact model. And this model shows up every single day. It's such a clean setup, right? Let me fast forward to another day. If we look at ES, we can see we're only trading New York session. I'm never trading any of these other sessions, right? But we see during Tokyo, we go down lower, right? And then right at London, we fill this gap. Again, a draw on liquidity has been taken. What can we expect going into New York session? We can expect us to go lower to our next draw on liquidity, right? Our next draws on liquidity being lows all the way down here. We can also use this 1 hour fair value gap as another draw on liquidity, right? That being said, right here, we have a bunch of lows, right? Bunch of high time frame lows being even further draws on liquidity, right? These are all draws on liquidity, but we have to think to ourselves and be realistic with ourselves. Is price going to dump all the way down there? Probably not, because that's just not how the market works, not in one trading session. But coming into the morning, right? We come into the morning, we already see this gap filled, so we don't expect to go any higher, especially looking at the trend, right? Trend is our friend. Trend is our friend. This is the hourly. We're going up. We're going up. All right. Bop, 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 boom, boom. We are dumping, right? So we were currently here when we saw the market. We saw it retest this gap, and now we're expecting to go lower, right? So our goal, scrolling in, is looking for shorts. That is our daily bias. Turn on the trading sessions. We come into here. We see this 5-minute fair value gap. We see price constantly respect this fair value gap, right? So if we enter back into it, then of course, why won't we sell out of it again? Sure, sometimes you'll manipulate through it. That's all right. But today we are playing with it. We also see low resistance liquidity coming over here. We see a series of close knit highs being built here. And we see price come up and take out a majority of these highs, also filling to the top of this 5-minute fair value gap. When we see price do this, we're going to look for sells because on our higher time frame, you're looking for sells. And if this doesn't look familiar to you already, then you're already missing something. This is almost the same exact setup. But coming into New York Open, we have a massive fair value gap. What do we do instantly? We come up and we blast through this fair value gap. We are draws on liquidity, right? That being said, we do not take out these relatively equal lows. We end up building more liquidity with this low right here. I have all the traders taking longs, putting their stop losses, right? All these traders long, putting their stop losses in these areas, whether it's here, whether it's here, whether it's here. These are orders waiting to be swept. Now looking at what I wrote, we are looking for draws on liquidity, right? We have Tokyo low and London low. We also see internal highs of London being swept, respecting a London fair value gap. We look for that reaction, we see that reaction, and we want 5-minute bearish order flow. Look at, so we see our drawn liquidity, we see the highs and lows of the session, we see our draws down here, and the highs and the low of the session. We see manipulation internally at this 5-minute fair value gap, also sweeping out all of these highs. When we see this, We want a reaction. We want to go downwards. Next, we wait for 5-minute bearish order flow. We need to have a target for price to go. Our target's down here. When do we have 5-minute bearish order flow? When we break below this low, right? We are now bearish here. And then we want an eternal manipulation leg that we see on the 1 minute, right? What do we see here? We see consolidations. We see a bunch of liquidity built up right here. Boom. Liquidity swept. Price on the 1 minute closes below here. We change from chopping to leaving this. We see price chopping here. We see the manipulation leg, and then we are looking for distribution. Where are we looking to distribute? Down here. Why? Because we have draws on liquidity. So what am I looking here for my entry? For us to be bearish after sweeping out these highs. Also, testing this 1 minute fair value gap. Put our trade there when that candle goes bearish. And then we are looking for our take profits down here. Done. Trade hits. And if you notice, this right here, this area right here looks very familiar to the overall model. Do you see what I'm saying? Over here, we have gone up. We went down slowly, right? We manipulate up to a fair value gap and we distribute lower. That is what's happening here on the bigger picture. And then internally, we see the same thing. We see price go up, we see price go down, we see price chop, chop, chop. We tap, manipulate, taking out highs in the fair value gap, and we distribute lower. Right? This smaller time frame lines up with this larger time frame model. It all lines up perfectly. And this is how you get the best risk to reward. And if you look at my trade recap from about last week, going over all of these trades, every single trade looked almost the same, making me thousands of dollars that day. Its price moves for one reason and one reason only, and it is to grab liquidity, right? So the moment you learn that and the moment you get your mental under control and understand how to take these trades is the moment you'll become profitable. Thank you guys for watching. If you guys need more of a beginner video, then please comment that. Thank you.